Hi all, this is Steve Miley for ForexTraders.com. We're now going to take a look at both the euro versus the dollar and the dollar versus the yen. The dollar within G3 through this US election, presidential election result in here, and the very, very erratic activity we see, but the underlying and the overall takeaway from it from a technical perspective has been that the dollar has come out as the strong G3 currency. So an initial move here, looking at euro dollar, the initial move higher on the perceived Trump result in here, Trump win, took the market up through 112.05. That was enough to shift the intermediate term outlook from bearish back to neutral, okay, through 112.05. Not to bullish, with market failing back from ahead of 113.66. But the subsequent sell-off that we saw in here, this plunge back land lower, has been enough to signal a shift back to that intermediate term bearish theme. We still see risk on an intermediate term outlook into November and beyond, through middle of Q4, going into the latter part of Q4, late November into December. We're looking lower, back to challenge this October low at 108.48, potentially then through there at supports here at 108.2321, 107.77 and 107.08. A bigger picture into year end, maybe even a move back closer to this low from the very end of last year at 105.20. So that's the bigger picture threat there for euro going forward. Also looking for a bias lower going into this week. If we look at the dollar versus the yen in here, this spike lower was enough to shift the intermediate term tone, which was originally bullish for us with this double bottom pattern that we put in August through September and confirmed with a push higher in October. The sell-off down lower in here took out an important support. We'll look at it very quickly on the intraday chart. This support in here at 101.62, the plunge lower down there through there was enough to shift the intermediate term outlook back to neutral. But this strong turnaround rebound that we had over the last 24 hours leaves real risk, although within this range theme again between 100.07 and 105.53, the recent high, real risk of a push up back through 105.53. That would then re-energize the bullish intermediate term tone, reinforce the double bottom structure, and then leave risk higher. But 105.53 needed for an intermediate shift back to bullish, and then targeting higher levels here at 107.49, 107.90, potentially through November into December. This has been Steve Miley, the Market Chartist, on behalf of ForexTraders.com, and I wish you a great trading week.